Hello and welcome back to another episode of FinTech Focus TV with me, Toby Babb. Today we're back live in the studio and I am delighted to welcome physically onto the show for the first time Chris Murphy from Ediphy. How are you?
It's great to be here.
Listen,
nice
lovely
to see you
be.
in person. Yeah.
I know.
Yeah.
Last time viewers will remember this was done over Zoom and now we're back in person. Everything seems to be going pretty well.
Yeah, plugging away, fighting the good fight and all that.
And seeing some really exciting stuff and good PR and news happening all the time about Ediphy.
No, we're getting some great traction from clients and onwards and upwards, yeah.
Good. Well, look, the viewership's grown since we last spoke. So there's going to be people here who haven't heard from you beforehand. So before we get into the reads, tell us a little bit about Ediphy and the background and what the company does.
Sure. So Ediphy is a new capital markets focused financial services business. So, we're essentially marrying new technology with a regulated service offering for institutional asset managers, essentially.
And it's a sort of two-pronged area of the business that you're looking at, and I guess two points of focus you're looking at. Tell us a little bit more about that.
Yeah, so really, what we we view financial services as a digital-first business, right? So there's no physical product in this industry at all. We're essentially moving bits and bytes around in these financial transactions. So we think very firmly that you need to think about this business as a digital business. And so a big part of what we do is data analytics and workflow around data, and then we couple that with a regulated service offering so that we can tick the two boxes. So essentially, you can think about us as being the sort of investment banking equivalent of a Monzo or Starling. Yeah. Some of these guys in the retail space have kind of said, okay, we need to re-engineer the front to back, the architecture of a lot of these incumbent businesses. The technology is 20, 30, 40 years old in some cases.
Yeah.
And you really need to have a rethink of that. And we're doing exactly the same in the capital market space.
It's very difficult to shift, isn't it, that sort of technology? We'll come on to that a little bit later on, but I think you're absolutely right. My view is that capital markets world has been sort of stifled a little bit because of some of the incumbent tech and the danger of being able to move away from it. And I'm really encouraged to see a sort of new wave of businesses and products coming through that allows a little bit more manoeuvrability. I'm sure we'll come on to that in a little bit.
Yeah.
One of the other magic words you just mentioned there was the whole world of data. There's nothing cooler to talk about in the markets at the moment than that. And there's so many different areas and aspects of it. I know you've had a lot of press recently about sort of some news you've had about the Consolidated Tape and everything that's happening in there. Tell us a little bit about the thought process behind that and the why and the need for it and what you were able to do to help it out.
Sure. So the Consolidated Tape discussion, for those of you who are not familiar with it, has been ongoing now for many, many years in Europe. So in the US, we have consolidated transaction tapes, both in equities and in fixed income. In Europe, so far, that hasn't been the case. MiFID II came in 2018 and really started to bring out a lot of transparency in the market. So now every single transaction pretty much in Europe is made public. The big gap has been that there's been no consolidated tape that has brought all of that data together in one tape of record for the entire market to start to see what's going on within these markets.
Why is that?
Well, it was envisaged by the regulation back in 2018. The problem has been that there were a few quirks to the regulation, which meant that it was non-viable for any provider to come through on a commercial basis to offer it. Now, the European Commission and also in parallel the FCA and the UK Treasury have recognised that there are those impediments, and so they are working through recent proposals to remedy that situation. And so we do think that there is going to be possibility of a consolidated tape coming sometime in 2023. Now, as part of Ediphy, we have been aggregating this data for some time. So after 15 minutes, the data is freely available. The problem is it's published across about 200 different endpoints. But with our technology and with our aggregation software, we have been scraping that data and aggregating it and cleaning the data. And so we think, we've been doing that anyway, just as part of our execution service, because we think, we know there is value to having that data and allowing it to guide some of the execution in the market. And so, we feel as if we're best placed to come forward with a solution here once the rules change. And because we are aligned to the other consumers of the data in the marketplace, so the asset managers and the investment banks, what we're saying is, we want to provide the data or the solution on a utility basis rather than having it, being monetized by another data incumbent, because we firmly believe that this data should be democratized to the benefit of all market participants.
And that firm belief comes from just a sort of general view of the marketplace, and I guess, look, as you're saying, that you're firmly believing in putting that as your view out there in the marketplace. This is obviously something that's coming through, and as you say, in 2023.
Yeah.
And something which you're confident on being, mainstream by that sort of stage. What gives you that sort of genuine belief and fortitude behind that?
Sure. Well, we founded the company not just with a view that we have a better mousetrap from a technology perspective, but we also felt as though markets needed to become fairer and more transparent. Let's face it, the markets businesres have had a fair amount of scandals in the past. And we feel as though it is important to have a rebalancing of the marketplace and really have providers like us that are helping our clients and our clients' clients. So the pension fund holders on the street really have confidence in the integrity of the markets, and transparency and this consolidated tape is actually a key part of that, because it gives everyone that is engaging in the market trust that they're trading on market rather than leaving fat margins for other players to extract. So it's a key part of our underlying ethos that we want to try to make markets more fair and more transparent.
I think that's so important, isn't it? Because that trust and transparency, you're right. Look, it's not an industry that's been immune to scandal over the years. But I actually think that over the last 5 years or so, and particularly actually the last 2 or 3, from villain of 2008 to sort of very much cleaning up its act, I think the capital markets sector has been the backbone of how we've survived the last couple of years as economies. And I think that sort of good press that has been so devoid of the sector for the last decade or so actually needs now to really push itself further forward and capitalise on what's happened over the last couple of years, because it is the foundation of every global economy full stop. And my view on it that does come down to those elements of transparency, of fairness, of security, of loads of different areas around those sort of pieces. And I think what you're talking about there, if I'm not mistaken, absolutely it feeds into that. Let's keep on working on the good reputation that the industry's gained over the next couple of years, and avoid the next the next scandal or the next problem that's going to only move it further backwards. I'm really interested as well what you were talking about beforehand. You're a tech-enabled business. You've got ambitions of where you want to go to. I think you've spoken about the Monzos and the Revoluts and in that sort of retail world. Mm-hmm. We know that it's a slower burn, or has been a slower burn in the investment banking space. Tell me a little bit about the vision and what that means for you guys there.
Yeah, I mean, look, growing a business in the sort of B2B space, particularly in this industry, it does take some time. So, unlike in the retail space where you can get stuff out there and you can get traction very, very quickly with large numbers of clients, the sales cycle in this business takes a lot longer. So, we've been conscious that we want to continue to build our brand around this trust, transparency, and innovation in technology, and really, establish. And that's another key part of the reason why we're doing the consolidated tape, is we think that that is very much aligned to our brand. But I guess we are really trying to orient the business around the trends that we see in the industry, and those trends are going to pan out over the next 3, 4, 5, 10 years. And so it's very much positioning ourselves with the right capabilities in order to to help our clients as those trends play out. So those trends are largely around electronification of fixed income markets.
Mm-hmm.
Traditionally the fixed income markets have been very manual, very much a principal bilateral model where you've been picking up the phone or Bloomberg chats. Certainly the pandemic has sort of has accelerated some of the trend to electronic means of execution. And so we think that there is going to be a strong demand for services like ours that start to knit together some of that fragmented liquidity, allow clients to optimize their workflow, but then also bring in the data element so that they can get much more data driven about how they're executing their business. So what does the data tell us about the quality of execution that they currently have, and what does the data tell us about how they might be able to improve the execution? So that very much aligns to the two major strands of our business. One is around the execution services, and the other is around the data analytics. And those two things we think combine very, very nicely to help our clients achieve their end outcomes.
And that's a really interesting sort of viewpoint, isn't it? Because there is a strong alignment between both of those areas, and it is the areas there where I think there's massive opportunity gain for for your clients. And I'm really interested on this show. We talk to a lot of founders who have started their businesses born out of frustration or born out of seeing glaring problems and not being able to fix them in their current environments. I know you sort of come from that sort of investment banking world, and I presume you're in that same sort of category, right? Is it that sort of frustration of seeing issues around it and thinking this can be done better, and not being able to influence that's born?
Absolutely. So look, I think there are lots of really, really good quality people in some of the large investment banks, and they're getting really, really frustrated, and it's just because I think my observations were that largely most of them are carrying a large amount of technical debt. So these businesses, they digitized incrementally over a period of decades, but nothing was by design, and so you end up with this fragmented patchwork quilt of systems that are all sort of loosely coupled, but they're all talking to each other, but the integrations there are very, very fragile. There's lots of internal reconciliations of data between one system and the next, and they always break, etc. So it slows down the pace of innovation, because every time you want to make a change here at the top of the stack, it has unintended consequences further down the stack in your front to back, and so it's really gummed up, I think, the agility in a lot of these incumbent businesses, and so in many ways, the reason why we started Ediphy is in recognition of the fact that some of these businesses are struggling to innovate. They're struggling to make those new offerings that the clients really need, just because they're so hamstrung by some of the technology, but also it's just gotten a lot more bureaucratic in these businesses, especially since the last financial crisis, where obviously a lot of the businesses got into trouble, and so the regulation has come down hard and just made everything much more bureaucratic. So I'm loving the ability to become much more entrepreneurial again, and really have an idea, act on it, and deliver for clients.
Make a difference.
Yeah,
absolutely. So I think what's really interesting for me is there's been you mentioned the fixed income space probably being fairly static for some period. There seems over the last few years to have been a lot of innovation, new companies coming into the place, challenging the sort of accepted norms of it all. You mentioned before about the incumbents and the challenges of the incumbents, and I guess some of the advantages that Ediphy has in that sort of space. Expand a little bit on that. Tell me a little bit about your advantage, your competitive advantage, and where you're set at the moment.
So look, we think in general, the incumbent investment banks, they're not going away anytime soon. No. So it's not as though we're expecting to displace them. Actually, in many cases, we're working very, very closely with them, just because we feel as though we can help contribute to their business by helping them with the client user experience. So they're still the providers of the end liquidity in many cases, but we can help basically stitch that liquidity together for our clients and for their clients, so that it can be a win-win situation. So that's where we think that we have the advantage, is that because we have built our technology stack from scratch in the cloud using modern techniques like Kubernetes engine, etc., etc. We have that ability to create those workflows and those user experiences that can sit on top of multiple liquidity pools, whether that's liquidity coming direct from dealers, or whether that's liquidity on trading platforms, etc. And integrate that with things like transaction cost analysis and other data analysis tools, liquidity scoring, etc. In order for our clients and for theirs to be able to have more meaningful interactions with them.
It's a fascinating world, isn't it? And I'm so pleased that there is products like these coming together to, as you say, not necessarily displace the status quo at the moment, but to improve that experience. And I think you probably find that a little bit more in the retail. It's a completely different retail world, thanks to places like Monzo, where it hasn't necessarily been right, we're here and the whole thing is to completely displace the industry. It's about how can we move that further forward, and it sounds like that's very much at the sort of core of what you're trying to do.
Yeah, and look, I think there are lots of dealers out there that struggle. The end clients struggle to find where they're best at providing liquidity. So, what we're trying to do with the data side of things is to highlight where a particular dealer might have an axe, or might be consistently strong in a certain part of the market, because gone are the days where we have 15, 20 investment banks that are trying to be all things to all people. Again, because of the implications of the last financial crisis and the reduction in balance sheets, and many of these firms, they are trying to be a little bit more niche and a bit more selective, and so having aggregators like us that sit on top of all of that liquidity and now allow clients to find the best price and find the best provider, we think that's valuable both to our end clients, but also to some of the liquidity providers as well.
Let's focus on that. You've spoken there about the advantages to your to the end clients. Now you've been talking about that all the way through. I love looking at the problems that people face and how companies like yours are coming through and saying, right, let's take that and solve it. Summarise for me the sort of problems that the asset management world are facing at the moment, your customers are facing at the moment, and how you are providing antidote to that.
Sure. So if you think about the asset management community, again, as a consequence of MiFID II, they're having a much higher onus on them establishing best execution in everything they do, right? So they need to get best execution for their clients, and they also need to demonstrate that they've got a process around measuring that as well. So really what we're trying to do is give them a win-win here, right? So we're trying to allow them to get better execution for their clients and demonstrate that, but also reduce some of their internal cost base in terms of trying to support that. So the idea is that we allow them to execute better in the marketplace on behalf of their end clients, so their end clients get a better outcome, and enable them to reduce some costs internally, because they don't have to buy separate software applications or integrate to 15 different venues. We do that for them on their behalf, or on behalf of many clients. So that's a shared cost amongst all of our clients, rather than them having to bear that cost internally themselves. So we're trying to give them value on both axes.
I think there's a significant play there, isn't there, about cost reduction, about friction removal, about making the process that much more user friendly than other people. Every good business in this space that I'm talking to are all really heavily focused on those sort of areas. How can we make sure that these aren't just nice to haves.
Yeah.
These are processes here that are generally adding significant value to to the end user base, and that seems very much what you guys are set up to do.
When we speak to our clients on the asset management side, the workflow is very, very fragmented. So they've probably got 3 or 4 different venue GUIs. They've got a whole bunch of spreadsheets.
Yeah.
They've got offline systems to manage or measure best execution and transaction cost analysis. And then they've got maybe another sort of data analysis tool that they use off the side as well. So what we try to do is pull all of those elements together so that it's one integrated workflow, one data architecture, and it removes the need for sort of lots of manual fragmented process, and also for reconciliation as well. Because
which is the beauty of being a tech-enabled business,
absolutely,
right? Yeah, coming in there and using that tech to drive efficiency
Yeah.
For everyone throughout the process.
That's right.
It makes it such an exciting future for everyone, doesn't it?
Yeah, it's great to be building stuff and delivering value to clients rather than just turning the handle and operating a business. We're trying to grow the offering continuously.
That's a good segue into talking about the future. Tell us what it looks like for Ediphy. What's exciting? What's coming up? What's 2022 got in store?
Sure, it's more venues, more asset classes, and more functionality for our clients. So, we firmly believe that the fragmentation in this industry is where all the cost and complexity is, and if we can continue to reduce that by delivering integrated technology services, then we think over time we can build a great business and deliver a lot of value for our clients.
And you talk about multiple asset classes there. Are there other areas where you think this still naturally swings across to? Other areas you've identified?
Absolutely. So whilst we're focusing on fixed income largely because we think that there is an evolving market structure issue there, we have plans to add capability in FX and equities, and have a holistic offering there for your average asset manager as well. So that's all in the future, but we've got enough on our plate with fixed income for now.
Bit by piece.
Bit by bit, we'll get there. Yeah.
Good stuff. So Chris, look, there's going to be people here who are listening to this who identify a lot of the problems, who are keen to find out a little bit more. Number one, who should be talking to you?
Yeah.
And number two, how do they reach out to you?
So, anyone who is in the capital market space, particularly in fixed income, please reach out, and we'd love to chat a little bit more about what we're doing. Anyone also on the tech side that really wants to develop a career in financial services and in capital markets. Again, I think we're building a very interesting business here, and you can have a lot of fun coming and working for us.
That's so key, isn't it? I think people sort of forget about that as part of the this is the day job for us is all about a really competitive world at the moment. For attracting the best talent to your business, and within that, there are people there who are getting multiple offers. I've just been speaking to someone before we came on air who's got 4 different offers at the moment, all great companies, and very difficult to decide each of them. It won't be the company who's got that's offering the most money to that individual who's going to get it. It's exactly the same thing that we've just been talking about the complexity and the excitement of the actual problem which you're looking to evolve. And I think what you're talking about there is so important to making sure you're attracting the best talent to your business, being crystal clear about the sort of complexity and the significance of the problems you guys are solving. And when you're talking about that and doing something as exciting as I think you are right now, and the potential of where that goes, and if you think about just the revolution that we've seen on that retail banking space and what that looks like, and how the world's changed so much around there, and think about what can happen in the investment banking world with no real prohibitors to seeing that, and the appetite now increasing all the time for that sort of I think there's less barriers to seeing that happen, more appetite to seeing that happen. That becomes a really attractive sort of opportunity.
Yeah, I think throughout my career in financial services, I think a lot of people's career choices were driven by the financial incentives.
Absolutely.
And those are still important, but we think much more these days. But also, what's more important to us is people that are coming to us with a shared purpose, and people that have a passion for building things and doing things in the right sort of way, and wanting to work in an environment which I think has very little politics, but where we continue to challenge each other, because by being intellectually honest and challenging with colleagues, that's how you get the best outcomes.
Absolutely agree.
Yeah.
Chris, it was a pleasure last time, even more so to do it on purpose this time
great.
out. It's lovely having you on the show. Thanks for joining us.
Thank you very much.
Absolutely great. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.